We're here today on RealAgriculture.com. We're with Jonathan Driedger from Farmlink Marketing Solutions. Welcome today, Jonathan.
Thank you.
Okay, Jonathan, let's talk about the feed grain market, specifically corn and barley. Let's start with corn. It seems like we sort of really understand the acres to be planted in the U.S. Acres are getting in at a rapid pace based on the great weather we've had through the Midwest. Is there any surprises or which direction is this market going to trade?
Well, that's a really good question, Sean, and I think one of the challenges of the corn market here is because there's a lot of different moving parts here that are going to impact corn values here going forward. I think on the supply side, at least at the early stages, you're right. We have a pretty good idea what the acres are, and we know that growing conditions are off to a pretty good start here. So I think unless we start getting some weather issues, which is always a risk, of course, and always creates some volatility going forward. I think on the supply side, traders are kind of getting their heads around what they think that number could be. But I think there's still a lot of uncertainty on the demand side here going forward, and I think a couple of the question marks that traders are watching is, first of all, there's been a lot of chatter recently in the media about exports of U.S. corn to China, and I think ultimately I don't think the volumes are that big that they make that big a difference on the S&D, but certainly psychologically it makes a difference in traders' minds, and of course obviously with China it's a bit of a black hole for information out there in terms of how much they might actually take. Potentially they could take quite a bit, and so that's a question mark. The other one, of course, is what's going to ultimately happen with the biofuels mandates and whether we go to an E12 or an E15 going forward, which also will have substantial impact on demand. Now, if we sort of back into the corn S&D, say based on some of the numbers the USDA threw out earlier this week, based on their demand estimates and projections for a reasonably good crop here, certainly the corn market is fairly comfortable on the supply side and in terms of projected ending stocks. And if that is the case, we're probably looking at a market that's going to be reasonably flat going forward. We've rallied up here a little bit. If the yields are there, or if yields are even bigger than what the USDA has penciled in, we'll probably see a flatter market, maybe a little bit of downward pressure. But I think it's also important to remember on the corn side that if there's any kind of a yield hiccup and any of these demand things sort of start coming in a little bigger than what's penciled in right now, there's not a lot of margin for error, and things starting to tighten up very quickly. So I guess from our perspective, we probably view corn, the most likely scenario being maybe sort of a flattish range-bound market, but at the same time, there certainly is a possibility for a pop here to the upside, either on due to the fact that there isn't a lot of margin for error on the production side, or if some of these demand things come in bigger than what people are sort of accounting for right now, and both of those are reasonable possibilities.
So if we are with corn, if we are going to be in this broad sort of trading range, possibly some daily spikes either way, what do you think is the the 6 month, or I guess the 2010 trading range for corn we can sort of expect?
Well, I think if we look, for example, at the December futures contract, and we're trading a little below $4 right now, and I think we'll be reasonably anchored around that 390-ish mark on the December here going forward, at least until traders are comfortable that crop is made, and so there'll probably be a little bit of a weather premium built into that thing until we get sort of well into July, and traders are comfortable with that. In terms of the downside, we certainly seem to, we'll start gravitating towards that 350-ish range or something like that. That seems to, maybe a little below perhaps. Again, obviously depending on as traders tweak their ending stocks figures based on demand and what yields will come in at. But it's so certainly I guess I would phrase it that if there's maybe some downside into that mid $3 range, maybe a little below. If this crop does come off with a pretty good yield. In terms of the upside, I think at a certain point, if we rally too much higher here, you maybe start crimping some demand and rationing a little bit of demand around the margins. For example, you start getting offside on ethanol margins and those sorts of things. Maybe you start crimping at the demand side a little bit. So, those would kind of be the ranges that you'd probably start looking at. But again, if we start tightening this thing up a fair bit because of the yield scare, whatever the case may be, a certain amount of that demand is fairly inelastic, and you could pop this thing higher.
So we're in the reality is we really are living in a reality right now where with some of these news scares, whether it be excess rainfall or shortage of rainfall, or we tend to really trade that news, and so some of those short-term opportunities are just that, are short, and so producers, whether you're selling or you're buying, want to make sure that you're taking advantage of some of those opportunities in some form or fashion.
Yeah, no, I would agree with that, Sean. I think that I think that from a risk management perspective, I think it's important to be disciplined. And so, for example, for the end users, if they drill this market down a little bit, maybe you start getting a little bit of coverage. I mean, could they continue to press it lower? Of course. Obviously, it's the kind of environment we're in. There's a lot of economic uncertainty, all different dynamics that could continue to put pressure on that feed grain market. But I think, or on the producer side, if these markets pop higher, for most markets, it's an opportunity to be a little disciplined and take some off the table. And I think that's the kind of environment that we're in. Showing some discipline, and taking advantage of opportunities when they pop up. I think that's just prudent risk management.